Hi, it's Steve and Joe from Fresh Agenda. And Steve, we're back with a bit of an overview of a pretty positive GDT event, number 291, against some strengthening background fundamentals.
Yeah. So let's start with those background noises, positive noises. So just set the scene. We've got, as everyone knows, slowing milk growth in Europe and US. Milk is tight, so we're seeing rising prices for raw milk, cream, skim milk concentrate. We've got dry weather affecting the western half of the US, which is impacting water supply. Feed costs are high. Latin America in a bit of trouble with drought expected later in the summer. And we've got probably a worsening rainfall situation in New Zealand, I think. If it stays this way, it will certainly become an issue.
It's a bit on the edge, isn't it?
Yeah. Trade's holding up quite well, though, and we've seen futures markets firm in the lead up to this event.
Sure.
So at this event, we had pretty strong improvement across all commodities, almost all contracts.
Not BMP.
Not buttermilk powder. Just let us down on the C2 pricing from the last outcome.
But all major commodities.
Yeah. Strong across the board. Interestingly as well, just there, how they compare internationally. So, we've seen butter firm in Europe, and we've seen cheese prices line up. So things are all, I guess, in a firming tone. And importantly, that premium for New Zealand skim milk powder, regular skim milk powder, has also come back up towards the average.
Sure.
After a hollowing out there for a little while. Demand was quite good.
Yeah, for skim in particular there.
Yeah, an AMF. And just showing the plot there is the scatter chart there that plots the relationship of the early round demand and the price gain. So staying on trend there, but it's at the high end of experience in terms of that gain. In whole milk powder, we had another 10,000 tonnes taken out of the event volumes over the next quarter.
Sure.
So Q4 volumes. That takes it to 40,000 since the end of season forecast. So that's quite a big drop. And in this event, we had Chinese involvement reduced quite a bit. So that meant other regions could step in. As we saw earlier, whole milk powder demand was good in those early rounds, so not a problem with overall demand at these prices. As expected, it would bounce back up, and as futures has indicated prior to the event. So looking at China there, it's buying a little bit less than the last two seasons, but it hasn't fallen over.
No.
This is just GDT sales, of course. And just to remind the relationship between whole milk powder prices and the shadow value based on European skim milk powder and AMF. Right. Skim milk powder, again, Chinese involvement down, Southeast Asia stepping up, and we've seen that lift in sentiment and prices in futures markets gradually trending higher prior to this.
It really is a significant step up from Southeast Asia there in this event, which is interesting given they're in a little bit of trouble with COVID and the like.
Yeah, but I guess the word out of the market is that we see buyers taking longer positions because of that uncertainty. And
because of the trade logistics issues that they're facing, so...
Yeah, and now it's clear skim milk powder's on the march, so, some would wait until that is evident and before stepping in.
Jump back in.
Yeah. Butterfat, we had this comment last time we did this, was about a month ago.
Have we seen the bottom?
Have we seen the bottom? It's still not clear. Trade data's still relatively weak, and those fat prices are elevated. So there is a risk that with COVID taking longer to clear, we're going to see that being an issue, that the butterfat demand in those channels may stay a little under a cloud.
Sure.
AMF still a premium on butterfat terms. So in the lead up, we had seen the New Zealand milk futures price drift back up to $8. So put on about 25 cents since the last event, and naturally this event proved that because the spot value was a little bit above $8.
Yeah, and Fonterra's just confirmed the midpoint of their forecast range for the season at $8. So the stars are aligning.
Yeah, that's despite a 2 cent lift in the New Zealand dollar as well against the US.
It's pretty positive, isn't it?
It is. Joe, chart of the week.
Yeah, chat of the week this week. Just thought we'd have a bit of a look at some July data from the US on production and just some interesting trends, seeing what's happening with cheddar, which has probably been a bit of a focus for manufacturers over the last 12 months or so. But we're just seeing this bit of a jump in non-fat dry milk and to a lesser extent skim. And we've just said that it's tight there. So thought we'd take a look back at what this is in comparison to.
So that's year-on-year changes, showing how cheddar was pulled back during the worst of COVID in the US to match demand, because cheese demand fell. It moved a lot of milk to dryers, particularly in the western part of the country, and a big step up in production. Now, that's starting to flatten out.
Yeah.
Because as you can see on the right, cheese demand or cheese output is growing more strongly. Patchy, still a lot of volatility in the US. And you can see barrel cheese prices are still below 3,200, so there's still a lot of headwinds there on the demand side. But as milk slows down in those higher producing milk powder regions, that's the flag for tightening US supply.
So and part of that is the drought conditions, obviously, in that part of the US.
Yeah,
is going to impact those powder dryers more.
Yeah, pushing up feed costs and squeezing margins. Yep. So that's all we have for this week. Thanks for watching. We'll be back again soon.